A growing number of home buyers are looking into assuming one of those COVID-era home loans, but area realtors say there are some warnings you should know about. 9 News real estate expert Lane Lyon joins us this morning to explain. Lane is a realtor and managing broker at Coldwell Banker. Thank you so much for coming in.
Corey, good morning. Thanks for having me on.
You hear about these 2.75, you're like, I want one of those.
Remember those days?
So
Yeah,
nice. So let's start with which loans are assumable, because not all are, right?
That is correct. We're talking mostly about government-insured loans. So these are going to be VA loans, FHA loans, USDA loans. And you're right, on the surface, this sounds like the perfect solution for home buyers out there. Instead of paying mortgage rates, which are in the high 6% and 7% range right now, let's see if we can't qualify for the seller's loan of about 2.75 to 3%. And if you can pull it off, Corey, buyers out there are able to save hundreds of dollars per month, if not more. The tricky part is, and what we're learning here locally over the last few months, is that these are very challenging loans to do. It's taking a while. There are a lot of hoops to jump through, and there are very costly delays. I was talking to a real estate agent over the weekend who said, I had a listing in Parker, buyer came on board, wanted to assume the seller's loan. It took a while, quite frankly. It was a mess. Yeah. They had to cancel, creating a lot of anxiety. And it actually reminded her of the days of short sales when it was taking months to close these loans, and that's what we're starting to see right now.
It looks good on the surface,
yes.
But why is it taking so long?
Well, it's complex. First of all, you have to qualify as a buyer with the seller's loan servicer, and getting approved isn't a guarantee. I was talking to a lender over the weekend who said a lot of these loan servicers, quite frankly, aren't equipped with the staffing to handle the demand of these assumptions. We just haven't done them in a long, long time. So be mindful of that. There are companies out there that are starting to pop up to help consumers navigate the process for a fee. But even so, on average, across the country, Corey, these loans are taking 1 to 4 months to close. Sellers may not have that kind of time.
Right.
Yeah.
So even with all of the hoops to go, there are several advertising that their loans are assumable to be attractive, of course, in today's market, right?
Well, and I'm hearing it too on listing appointments. Like, can't we just say that we have an assumable loan? Because that's going to bring people to us. And it is true. In fact, Realtor.com took a look across the country to get an idea about how many loans or how many listings are advertised as assumable. And that number was 6%. I thought it would be higher, actually. But take a look at this here. Honolulu has the most advertised listings that are assumable, but only 3.3%. Yeah. New Orleans, Ogden, Utah, Tucson, Arizona, Augusta's on there as well. Denver didn't make the list, but Corey, I am optimistic that as time goes on and if the rates stay where they're at, there's a lot of chatter that this process will become smoother. Okay. So be patient, but in the meantime, know what you're getting into. Do your homework because it's not easy.
Yeah, it's a little bit tricky.
Yeah.
Well, thank you so much for breaking it down for us.
Well,
really appreciate it.
Welcome. Have a great day. Welcome back.
Thank you so much. The jet lag is real, let me tell you. Lane, thank you.